folks, welcome back to another episode of Momentum Monday. Today, we're covering Reddit's IPO, Weedstock's huge week, Micron's explosive earnings, what's going on with the Fed, and then we'll touch upon recent concern in luxury retail markets. Then we'll take a big picture look at indexes, what's going on with the banks, and finally wrap up with our stock picks for this week. My name is Tommy Tranfo, and with us again is our chart ace, Ivan Hoff, and of course, the Joker himself, Howard Lindzen. Today, before we start getting into the topics, quick PSA. We're looking for two scratch golfers to represent StockTwits at the Grass Clippings Open. The qualifiers begin April 17th, and there's $100,000 up for grabs for the winning team. So if you have a serious golf game, drop us a comment down below, and we'll be in touch. We want to get the best of the best out there representing StockTwits. So let us know if you're interested in competing for $100K up top. So jumping into topics for this week, the big story was Reddit's IPO. Initial offering price of $34. Immediately, started trading at around 48. So what's the read there? Are we kind of hitting a IPO season again?
Oh, wait a second.
You want me to go, Ive, or you?
What was the read? Yeah, go ahead, Howard.
Well, it's a couple things. We'll tie it back into.
I don't see anything special.
What's that?
Go
Can you
ahead,
hear me, guys.
Yes.
Obviously, we have a lag again. I think the lag is maybe from switching to the sidebar, but I think the Reddit IPO also is a statement on the banks, excuse me, and just risk appetite in general, right? I think the last private round was 10 billion. I think right now it's probably trading at 8, even though it's up 50%. I don't know if we can pull any of that up as sidebar. You can use Koifin or FinChat maybe. But just shout it out here, Ive. What do we got the market cap at? 7.5 billion.
7.5 billion.
Yeah. So let's remember where this came from, right? This is a $10 billion market cap many years ago. So it's still trading under, the last round valuation, even after the big pump. I don't know who took it public. It was probably Goldman. And that's the other thing we're going to talk about this week is, look at Goldman's stock, right? So we're in this kind of sweet spot, nirvana, where the government's after Apple. The government's so busy trying to please every voter, no matter how narrow their identity is. The Democrats are doing that. The Republicans are just trying to tell people vote for Trump or the world's going to end. But so we're in this kind of sweet spot where people can do whatever the fuck they want. And that means Goldman and JP Morgan are having their way. There are no rules. So we should get this, kind of a sweet spot where companies can go public. The real question is, what happens after they go public? I think we saw this week that Instacart, squeezed up above its IPO price, right? It got to its highest price. I think it's Cart, Ivan. And so look at that. That does not look like a normal chart. That looks more like a short squeeze within an IPO. So I think anything goes. The Reddit IPO, what it truly means, and we talked about it last week, is it's a representation of kind of everything that goes on the internet. And it's cool. Listen, the numbers of people that use it are staggering. And I'm sure Ivan doesn't use it, but I'm sure Tommy uses a young person. But I can't comment too much on it other than the numbers are staggering because I'm not a Reddit user. But I think, like I said, overall, it talks to the fact that venture capitalists are getting a chance to get out. Goldman is having a heyday. JP Morgan's having a heyday. And the Democrats are trying to get elected. And that just means, financials and crypto have kind of free reign right here.
Look, the market is starved for new issues, right? For new stocks, and considering that it's been extremely hot since November of last year, it's expected to see more and more companies go public. But it's a different question if you should be chasing those IPO gaps on day one, because in most cases you see a chart like CART that is going to pull back initially, and then it's going to form an IPO base, and then it's going to break out, and your proper entry is right here, right 28, after an IPO base. So maybe something similar will happen with Reddit in some like extreme periods of risk-on periods. We can see a stock just have an IPO gap and just go. Like we've had periods like where a stock would go up 50 to 100% after their first day of trading, but we're not there yet.
What do you guys think are some of the no-brainer IPOs that are going to be coming next?
I don't know. Howard is probably better equipped with that.
I think Databricks, which is kind of in the snowflake area, will use this market to try and get public. But I don't think there's any no-brainers. I think what makes a market interesting and go up are that the public doesn't, to me, these things happen when you don't know the names of the companies that are going public, right? Like, what are the hot categories? More importantly, you're not going to get EV companies going public. We've seen what they've done in the public market. So what's been working? Semiconductors and financials. And the bankers aren't stupid. They like to take things and crypto, and they can't take crypto public. So what you're seeing is a lot of meme coins, because that's how you go public in crypto. You're not going to see another Goldman's not going to bring another Goldman public. So I don't think there's that many companies ready to be public. That's part of the issue. Is you had this whole Web 2 generation where you got your IPOs, Duolingo, which is not a huge company. You've got Uber and Airbnb, and you've got Instacart. So I don't think the world has many Web 2.0 businesses that, because of the ZERP economy, that are ready to go public. That's part of the problem. And Ivan pulled up earlier the IPO index. That may have been the way we talked about it 6 months ago. It doesn't do a lot of volume, but that kind of is representative of the IPO index. And that's been looking pretty good off the bottom. I stick with the QQQ or the XLK.
Maybe Stripe is one of the companies.
Yeah, but it's not like everybody hasn't heard of it. And you could have traded this through many different proxies, Adyen, for a while. So Tommy, I think it's more about, what's working now, and that's financials, crypto, and semiconductors. But keep going.
Well, funnily enough, one of the other things that's working right now is weed stocks, somewhat miraculously. And it seems like the legislative wins are starting to now favor the industry. Stocks like CGC pretty much doubled over this last week. What do you think of the action here? And, is it tempting to kind of, play in these waters again?
I mean, they're still in a huge, huge downtrend. So any short-term pop like this just makes me skeptical. Yes, trade them short-term, like quick swings or quick intraday, but I wouldn't put my long-term money in any of those stocks yet. They haven't proven themselves, and there is still so much regulatory hurdles that they'll need to jump over. But yeah, this is one of the hottest sectors right now, and the interesting part is that the MJ, which is the mostly Canadian stocks, is doing a lot better than the US version MSOS right now. But yeah, both of them are starting to shape up and potentially build bases on a daily. So
Yeah, maybe the Canadians are doing better just because of banking rules. Maybe they have banking rules there that allow for it. But the U.S. doesn't matter how good the regulation headwinds are until you can actually deposit money and do easy banking. So I think it's just more a point of is speculation is alive and well. Here's one that hasn't been speculated in a while. I mean, there's better ideas out there. I mean, I'm in a couple private investments. A long time I've been an investor in Ease, which is, kind of Uber. Now it's more of a retailer of oh, my dog's barking, of marijuana. And it's just companies doing well in terms of revenue side, but it's just so hard to make money in this business. And then on the selling of weed side, the margins aren't great. So you can get weed everywhere. So tough industry. Just it's got to be easier places to make money.
Rooting for those guys. CGC is one of the most active streams we got on our site. So the interest is definitely there from the retail side. So hopefully the tides turn. One of the art markets that seem incredibly hot wherever you look is what's happening in semis. Nvidia made a lot of hubbubaloo the last week with their keynote presentation, and then Micron reported their earnings last week and shot up from a huge kind of all-time high area. What do you think of the action here? Is it still just incredibly hot? Same story as we've been talking about.
Yeah, semiconductors are still the best performing sector year to date for a good reason, as the investments in the AI infrastructure are going to be massive in the next several years. And yes, Nvidia and some of the other semiconductors were the big winners so far, but now we're going to start seeing some of secondary winners like Micron, which they will provide the memory which will be needed in AI infrastructure in the servers. So major earnings surprise, over 200% earnings surprise, significant gap up near all-time highs on 400 on 5 times their average daily volume. Finally, after 24 years, they cleared all-time highs.
Wow.
Micron. So I think this report here could be the beginning of more to come. And so far this earnings season, we've seen quite a few gap and goes after strong earnings. So I wouldn't be surprised if Micron, even though they're a slow mover, also joined that group of stocks that do really well even after big earnings gaps.
Yeah, I would add, I just added it to my watch list. I have to say that I thought I was following semis. 145,000 people follow it, so it's not like under followed, but I just followed it. Just what I've been said, 24-year breakout on a surprise earnings estimate. That's one, I wouldn't say you rush out and buy it Monday, but that is one that I'd be shocked if we see it, trade down much short term, because there's so many people that obviously got caught by surprise there. And then you have, the all-time high, and you have the hot sector. And it's a pretty good story. I haven't just sprung saying they're actually going to benefit from AI and the storage. This company was losing money a couple of years ago. So to go from, negative $4 in earnings to positive $7 in earnings that could be just a gap and not stop type deal. So that, for people that want to chase, I'm not a chaser, but that's one I would almost give a green light to after, it may not look back for a little while. And I think the opposite of that is Lulu, right? So Micron's announcing, let's do the opposite quickly. Segue into Lulu Nike. So you pull up a chart of Lulu and it's the opposite, right? People expecting, to become a foregone conclusion that, casual wear and, Lulu's a bellwether in that. And I think JC had told me a couple of weeks ago he was getting short this, but I didn't see a reason to be short, but you can see what happens when everybody's expecting the same thing, and that the casual wear is going to, it's a no-brainer. They're always going to win, but there's so much competition here for these margins. And at the mall, every mall store is now casual wear. So you go from, Micron, which is a surprising breakout, and the tailwind of AI, to Lulu, which is a surprise, miss. And that comes from just so much competition in the casual space. So, and then you look at Nike, and again, there's so much competition in this kind of wear every day. The chart's just a mess in Nike, and then gap down again the other day. It's just chop soup. So, this goes to like keeping, for active investors, keeping your money in relatively strong sectors, and the surprises work in your favor, versus keeping your money in underperforming sectors and the surprises generally work against you. Go ahead, Ive.
I think Nike and Lululemon, these are not industry problems. These are company-specific problems. They just haven't figured out a way how to bring out products that people really want. And as we know, fashion is cyclical, because right now, all the rave is about hookah, which is owned by Deckers. Deckers is up like 200% in the past year, and also On. These are like the two major brands On setting up here for potential breakout, while Nike has been gapping down 3 earnings season in a row. And the same with Lulu. There are companies in casual where they're doing amazing, like Gap just beat earnings estimates, and it's been non-stop squeeze higher after their earnings breakout. A&F, one of the best performing stocks in the past year, it went from 25 to 130 and 140 in less than a year. So obviously there are hot segments in fashion and in shoes, and for whatever reason, Nike and Lululemon, they'll probably need more time to find their way. But they're companies with traditions, and they'll probably find their way, and their stock will come back at some point. But currently they're in a downtrend, and there are easier ways to make money than buying a stock in a downtrend during a bull market, no matter how much you love the company.
You guys are saying the concern is isolated to the stocks like Nike and Lulu, but the Lulu CEO came out with some comments saying that there's been a change in the U.S. consumer with a slower start to the year in the U.S. than expected, and you also saw a huge kind of downside surprise from Dollar General and Dollar Tree after their reports as well. So is there any kind of larger macro concern here about the strength of the kind of U.S. retail consumer, or is this just an isolated story from the Nike and Lulu perspective?
I think these are isolated stories, because I can show you just as many retailers that just had record earnings and are doing amazing post-earnings, like Target, Williams-Sonoma, Arhaus. So with the market so strong, unemployment so low, wages going up, real estate stable, I don't really see how there is a consumer problem. And obviously no CEO is going to say, oh, we screwed up, our products are not as good, and our competitors are doing better than us. Of course, they're going to blame the macro environment on any mishaps. So I think, of course, you can take what you want from it, but there are companies which stocks are thriving in this environment, and as market participants, we should be paying more attention to them and owning them, trading them, than paying too much attention to any macro noise, because it's not really helpful to the average investor to pay attention to that.
Yes. So I haven't nailed it there. I think the market overall, like we said, financials, speculative, new categories like crypto, infrastructure, and semiconductors and hardware are doing well. We are in a bull market. I think what I can take away anecdotally, I talked to tons of kids, for recruiting to our companies, and my kids' friends I spend a lot of time with in their 20s. And Tommy, talking to you, I know this is, though they notice, man, they notice their anxiety levels are high about how expensive it is to buy a home. They go into restaurants and they notice when they're getting ripped. They know where inflation, like they know they're paying high prices for things. They get shocked. They have sticker shock when they go into restaurants. That doesn't mean they're not going to spend. It means they're very discerning where they spend. And so, like Ivan said, their habits will change based on if they're going to spend. They want to spend it on stuff that, like Onan or Sweetgreens, or where they're going to spend, but very hard to predict where they're going to spend. You can see it with Tesla, right? They're buying hybrids, right? They want to spend, but if they can't afford it, they're going to go where they can afford and where their budget allows and where fashion allows them to kind of not get embarrassed. So, but they notice. The number one thing, and Tommy, maybe you can tell me, is you notice when you're getting ripped off because you notice prices are higher because of inflation at restaurants, travel. You kids are. My daughter just went to Mexico and she was complaining about a lot. How she was getting screwed by the airline and the hotel. This, and they're starting to act like adults. You young people are starting to act like adults because you notice when you're getting overpaying for something and getting ripped off.
Yeah, one of the trending memes that went viral last week was when Chipotle had the news of their stock split, and people were talking about how, it's of course when you have to pay $34 to get one burrito delivered to your house, you would hope that stock is doing pretty well. So there's definitely awareness as far as the increase in prices here. But speaking of kind of huge macro noise events, and you guys seem to be pretty dovish when talking about the economy. Powell is coming off FOMC, where he appeared to be as dovish as he's ever been when making comments on the state of the economy and the strength of markets right now. Any significant takeaways after FOMC last week?
Yeah. So before we go to the FOMC, I just wanted to mention something regarding all those orderings on Dash and Uber Eats.
Yeah.
I know they're expensive, so I'm surprised, and maybe that exists. You tell me if it exists. If there is a way, anytime you order on DoorDash or on Uber Eats, if you can automatically, you can put 20% of whatever you're buying. If you're buying something for $20 or for $30, automatically put 20% into the stock of whatever restaurant you're ordering from, if it's public. That would be a great way for younger people to
take a look at Dash stock. It's incredible. It's like one of my best. I put it in my IRA.
Yeah. So I mean, as you're paying $5 delivery fee, whatever other fees, can you just put every time you order $5 into the stock of those companies automatically without even thinking? But yeah, let's go to the FOMC. The market was a bit worried going into the FOMC. That's why we saw like a little dip right before the events in small caps and in tech stocks as interest rates were rising ahead of the meeting, because we had several inflation reports in a row that came above estimates, like both consumer inflation report and producers inflation report came above estimates the last few times. And everyone was thinking that the Fed is going to be a little bit more concerned and hawkish, but that didn't happen. Powell came and he said basically everything is going according to plan. All of the FOMC board members expect to have at least 75 basis points of interest rates cuts by the end of the year, and then more than 1% in 2024. So everything is going according to their plan. They're not worried about the light uptick in inflation in January and February. And the market really liked that. And you saw that monster bounce on Wednesday and the strong close towards the end of the week for many stocks. S&P, the QQQ, they finished near all-time highs. The small cap, they had a decent bounce, but they're definitely the weaker performing ones. Semiconductors bounced. I mean, Nvidia recovered very quickly from its rising to 20-day, and it's setting up again. So it's interesting to see Nvidia right now has $2.36 billion trillion valuation, and it's getting very close to Apple, which is like 2.66 trillion. So only 10% away, and that's a move that can happen in a week. For Nvidia to become the second most valuable company in the world, obviously Microsoft being still the number one with 3.2 billion. And Microsoft and Nvidia, these are the two companies that the market currently is saying these are the two biggest winners of the AI revolution so far. But there'll be a lot more, many more smaller companies who also benefit.
They don't have regulation headwinds right now in a way, right? Microsoft creatively went around the FTC by, acqui-hiring the team from a competing AI company, Inflection AI, and Apple just got slammed by, again, it's almost a joke, right? Like Apple is tough on app developers, but at the same time, if you're building an app in 2024, maybe you shouldn't be in business, right? Like the point right now is to be building on the web and to be building in crypto and to be building in AI. So if you're relying on an app, you're kind of a generation old. And the government's suing Apple for stuff they did 10 years ago. Right now, they only, if you want a blue bubble on your phone, you switch to Google, or, depending on if you want a green bubble or blue bubble, you switch. You got a choice, Apple or Android. So while the government's going to be wasting a lot of time and money of Apple's and ours suing Apple, Microsoft's figured out a way around it through acquisitions, and NVIDIA continues to power forward pretty much unchecked. And so, where there's less friction, that's where the money goes. Again, I think what you have to talk about with the Fed is look at J.P. Morgan and Goldman Sachs and say these people are going to, I call it evil. Evil is roaming the streets right now. These companies know how to make money, right? Unlike a lot of other companies. And what these breakouts, J.P. Morgan broke out well ahead of Goldman Sachs. These companies know how to make money, and the market is sensing that these companies, that is a big ass breakout by these two big banks. So while it's crappy for regional banks that have the carry trade on J.P. Morgan or the bad yield trade, J.P. Morgan and Goldman Sachs are in free roaming country. XLF also, look at the XLF index, which is kind of a little more conservative. The regionals are not the way to own this, but the financials are. So Coinbase has rallied, Robinhood doubled, but the Goldman breakout is the most interesting thing to me, because if you think there's going to be IPOs, Goldman is going to benefit the most. And if you want to bet on crypto, the leverage play to own crypto is Coinbase, because that's where all the tokens that go public, or whatever you call them, manifest themselves, get traded, is on Coinbase. So this is like just unbelievable bullish, activity for people that like stocks, right? Taking the macro out of it, what Powell is saying is showing up in J.P. Morgan and Goldman Sachs and in Coinbase and in NVIDIA. It's just unfortunate for Apple. They're caught up in the government, and that's going to be hard for Apple to make progress, period, end of story. So that's the story. And the Fed's, many smart people that I read think the Fed should be raising rates, but Powell's still talking about, or at least the market still believes that the next three rate moves are going to be down. So the market's still pricing in Powell is going to lower rates. at a time when a lot of people, the bearish people, think he should be raising rates. And so everybody's kind of caught. And that's probably pretty good for stocks, or at least pretty good for buying the dips. So I think every chart we've shown today, other than Lulu and Weed and Nike, Weed's actually kind of got positive little spikes, but everything except Lulu and Nike has been, what the hell are we talking? Like, there is nothing but upside and opportunity out there.
So we were on a space this week with Tom Lee talking about Bitcoin, and he gave us a 150K price target for end of the year. Is that, are you guys on the same page with that? Is that where you could see that going, as far as when you look at take a bigger picture look at crypto?
I don't do price targets.
When it comes to Bitcoin or any cryptocurrencies, it's impossible to have a price target. I mean,
Tom Lee, one of the reasons I'm not a fan, everybody's a fan of Tom Lee, it seems, because he's been right. People forget how wrong he's been too. When you make these crazy price predictions, it's hard to unpredict them, right? So he's just caught up in the hoopla of being, a famous person right now, and that's generally dangerous. I didn't listen when people shout out targets. I tend to ignore them unless I happen to be standing around listening to the reasoning. But JC walked us through, above 70,000 on Bitcoin, it could easily, based on, prior ranges, go to 100,000. I don't need to see why it would double again. I mean, I'm bullish. I am on Bitcoin, but, I own some, but I have no idea on the price target. And I don't listen to Tom Lee.
Any thoughts there, Ivan?
I agree with what Howard said. As he said, Bitcoin, I mean, it's impossible to put a market cap on them. So, they could easily be, 10,000 or 100,000. None of that would have really surprised me. As of right now, considering all the new ETFs, Bitcoin ETFs, and so many people owning Bitcoin with the intention to hold longer term and not really sell. And the small float, I wouldn't be surprised in a hot bull market for it to continue to go up. But then it will also correct significantly during market corrections. So it will be the more interesting part to me to see if there is a correlation during market corrections, if Bitcoin is really going to continue to correct much further than the market indices when we have the inevitable corrections, because we always have them. Like every single year, there is at least 10% market, 10-15% market pullback, and in some years, much bigger.
All right, I had to get that out. Appreciate the comments, guys. All right, so let's wrap this up. Howard, I feel like we know your stock pick for the week. It's banks, Goldman, and if you guys are looking for more content along those lines, check out G Piza's stream on StockTwits. He's also been all over XLF and the bank plays. So if you're looking for more chart setups on banks, check out G Piza on StockTwits. Ivan, any other plays that stand out for you as far as next week is concerned?
Yeah, I mean, I think one of the plays that I'm looking at is AMD. Since it's kind of holding here, it's rising 50-day, and that level here is around 175 is also its year-to-date volume-weighted average price. And since NVIDIA has been so strong, this is something I'll be paying attention for a potential bounce, at least towards its 20-day, like 190, 200, since it is one of the stocks likely to benefit from the AI revolution the most. So if this is the case, then we will continue to see those dips getting bought. And, lately it's definitely showing some relative weakness here on that pullback, especially compared to NVIDIA. So this is one of the stocks I'm watching next week for a potential bounce.
Love it. All right, the streams are going to like that one. Any final thoughts, Howard, for the boys and the streams out there?
No, I can't believe how I'm looking at the comments. Can't believe how poor StockTwits golfers are. I thought there'd be some ringers out there. That the only thing it seems like people are honest about on StockTwits is their handicap, which is funny. But I think it'll be an incredible event. I've played the golf course. It's going to be an incredible event. We've got to find if it's someone on StockTwits, let's get some +4s out there. Weather will be great. We'll be there. Maybe Tommy will be there. So send along names.
Yep. If you got golf game, let us know. All right. That's us for this week. Thanks so much for tuning in. Have a good one, guys. See ya.